Tesla had earnings today, and I'm not going to sugarcoat it. Things did not sound good on that earnings call. Today, I actually said on Twitter that the bar is pretty low for Tesla earnings. I'm not expecting a massive beat. However, we should be watching for guidance and Cybertruck news, which will be the main things to drive stock after price. Now, in our Discord community, which is free, you guys can get access to our live streams over there. From time to time, we do free courses, free trades. All of that's over there and on my Twitter, so follow both of them. But we were live streaming and we were talking about why that was so important. And we saw EPS come through, we saw top line come through, we knew that it was bad, and we hadn't seen Tesla drop off at first like we have now. And I was explaining to everyone that the reason for that is we have already expected bad numbers. Everyone expected bad numbers. What we're really going to look for, and the three things that I want to talk about specifically in this video, is going to be the Cybertruck, which the outlook on that just didn't sound good. The growing concern of Elon Musk more so focusing on making cars more affordable because he's just worried about the global economy and keeping demand high, which is something else we talked about in that live stream, was demand and keeping demand high and moving more away from margins. And now if you're an investor, the only thing that you really, not that you should care about, but the main driving factor is, when am I going to get my money back? And the only way you get your money back is when a company churns a profit. And so obviously the higher cash flow that the company can bring in, the hopefully more the stock's going to be. Maybe one day they'll give a dividend, which I highly doubt, but at least you have a better way of making money. And that's why the financial media and analysts are really looking more so to drive net margins. And this year, which we talked, or this quarter, I should say, which we'll talk about, was not the best. So 7.6% net margins, which a year ago was 17.72, right? That, I said, will scare investors even more. And the fact that Elon was spending more time trying to focus on his worries about the global economy, because here's the thing about Elon. I think he's good for the company, but he's just not an earnings call guy. I think he was trying to send a message to the Fed. I'm gonna go over this massive setup on Tesla because it does look like it's gonna drop down to 200 bucks, unfortunately, and we will talk about my puts. But I did say that the other aspect is that Elon said that the Cybertruck wouldn't even have positive cash flow for 12 to 18 months after production begins, and more so focused on just making the cars more affordable and talking more about that, because to him, it seems like that's more important. The position that I took as far as puts today, I got 4 Tesla November 17th, $240 puts. The reason for this was, yes, implied volatility is high going into earnings. If you guys don't know what implied volatility is, you can go to our Discord community and take our courses on options. It's free. We have a bunch of videos that will help you guys out. But basically, when we know that there's going to be a lot of volatility in the next week or so, implied volatility will rise. And when implied volatility rises, things like the cost of your premiums will rise, or the cost of your contracts. But now that the volatility will be removed, i.e. earnings is over, the implied volatility will drop, and then we will see the price of contracts drop. But even then, I needed a massive move in order to make some profits on this. And so far, Tesla's down about 8% from where I ended up taking my position. And I do think we'll continue to drop down about $212 and potentially down to $200. So I took that trade, and I'll probably end up selling 1 or 2 tomorrow morning and then letting the rest ride.